So the jobs report came in above consensus, and, well, we got the usual knee-jerk reaction, right? Buying yields spiked, the dollar surged, equities stumbled. But you know what? You take away the talking heads and all the superlatives, like it was a great report. And in my opinion, it had a lot of red flags. I mean, participation, again, declining. 186,000 people left the labor force. Where are they going? Private payrolls, by the way, are actually down month over month, 221,000. And by the way, down a ton from February when they were more than 700,000. In a household survey, they saw job losses. Get this, folks. So you've got two surveys in this report. Over the last 8 months, we had 12,000 net jobs, according to households, versus almost 3 million, according to the establishment survey. They both can't be right. Hourly wages were a bright spot, up 5.1% from a year ago, but adjusted for inflation, still down 2.6%. Meanwhile, the market is higher for the week so far, hanging tough. The S&P 500 might actually be on the verge of, it was on the verge of getting to that 200-day moving average. We'll see. If it doesn't, could that actually trigger some selling? Obviously, there's still a lot of tension in the air. I want to bring in Bianco Research President Jim Bianco. And, Jim, Jay Powell sounding more confident on inflation, at least easing up on the size of rate hikes. Lots of folks had the impression when he made the speech on Wednesday, we would have a jobs report that came in below consensus, maybe wages that were below consensus. We got the exact opposite. Did Powell make a mistake? Did he give us the wrong head fake?
Well, on the last part, yeah, I do think that Powell made a mistake. He does not want the stock market to go up. He does not want you to feel richer, because then you'll spend more money and that'll keep inflation up. So that was not his goal. What we saw in the misreading of the payroll report is a disappointment that the economy. Let me back up, Charles. Everybody is projecting a recession next year. That is the consensus forecast. That's the first time we've ever seen that everybody is now saying that next year we'll have a recession. And that is because if we have a recession, the Fed will pivot and the market's more interested in cheap money than it is in the companies that you invest in actually making a profit. That's the upside down world we're in. That's why the payroll report was such a disappointment. They want to see less people getting jobs, because then that means the Fed will cut rates. And when more people get jobs, that means they won't cut rates. And it's not about profits anymore. It's not about the health of the companies. It's about cheap money. They want interest rates to be cut. That's why Wall Street was so disappointed by it.
Are you concerned that this is a new paradigm that we'll ever get out of it? You look at someone like Warren Buffett over a period of 10 years. He ended up sitting on 140, 150 billion in cash. He did start putting some to work this year, but to your point, it feels like very few people are actually investing anymore, and everyone's sort of trying to catch the next wave, and that's not the essence of investing, is it?
No, it's not. Everybody's a gambler right now. If you look at the way that the market has traded and look at the explosion of interest in the options market, it's all about gambling. But to that end, why are we gamblers? A dozen years of cheap money, and that has gotten the mentality of this market to be about cheap money. So we've gotten away from investing. Crypto is the great example of that, in terms of the ultimate, they call it degenerate gambling that you saw happening in crypto over the last 2 years. And we've lost sight of the bigger picture. Now, what's it going to take us to get sight of the bigger picture? To right-size interest rates, to get away from that. The idea is own stocks and then whine to the Fed. They will cut and print and the market will go up and you'll make money. And that you want to buy good companies. We don't do that anymore. Right. And that is a big problem right now.
Yeah, no, I agree. It's so tough. And, you talk to people and you say, hey, you know what? Back in the day, this plus this plus this always equaled this certain outcome. And now it's harder to get there. I want to switch gears while I have you, though, and ask you about the world of decentralized finance and obviously the notion that this FTX scandal is now going to make it easier for the federal government to hijack this whole digital currency world. I've been reading articles about it. I've always been worried about it, but certainly it seems like now you can certainly have the Fed and others go in and say, keep it under the auspices of the government. Let's have a Federal Reserve back, digital currency. And maybe some folks who don't know really the nuances of this, what it could really mean in terms of true freedom might say, okay.
Yeah, that's what I'm really afraid of. The whole idea about decentralized finance is that you have control or sovereignty over your own money. It's your money. No one can take it from you. No one can censor it, can't tell you what you can pay for it, what you can't pay for it as well, whether or not you want to donate to Canadian truckers or you want to buy cigarettes or anything in between, or sugary drinks, which will be the next thing that they'll probably tell you can't spend your money on as well. And the government wants to step in under the auspice that FTX and SBF, what they did was simple fraud. We have rules for it. We've had rules for this for 100 years. You can't steal people's money. That's what they did. This is not a crypto story. This is a traditional theft story is what it is. But they're going to use this as the nose under the tent to come in and then basically regulate everything. Decentralized finance is not the problem and has not been the problem. But I fear, like you do, it's going to get caught up in the wave of regulation.
Yeah, well, we need to keep your voice out there. By the way, you're looking good, my man. I think you're running or something like that. You're making me a little jealous. Maybe they should ban those sugary drinks from me. All right, Tim.
Yeah.
Have a great weekend. All right. I want to bring in FS Investments Chief U.S.